today's webinar, How Can We Protect Millions in Supplier Payments? A very timely and important topic as business circumstances have changed, fraud has increased, fraudsters continue to get more and more sophisticated. This session is brought to you by apexanalytix, and we are thrilled to have one of their customers from Koch Global Services joining us live. I'm Naomi Secor with the Shared Services and Outsourcing Network. Really thrilled to introduce this session. And just before we get started, I have a couple of housekeeping items. This is a live webinar. We want to make it very engaging. Please do use the Q&A tab. It's located at the bottom of your console. You can add questions at any point during the session, and we're going to get to them throughout. I also encourage you to visit the Resource Center. You're going to find additional content on supplier risk management and supply chain risk management. And also, I've put our speaker contact details right on the console so that you can connect with them and continue the conversation. So who do we have speaking today? Pleased to introduce Swetnam, who's the Director of Finance and Procurement at Koch Global Services. And under his leadership, the supplier enablement team has transformed into a fully leveraged capability supporting nearly all of Koch Industries' supplier onboarding and master data management. And we have Barry Cook, who's the Director of Pre-Sales Consulting at apexanalytix. He began his career there as a P2P consultant, providing clients with best practices and process efficiencies to optimize their use of Apex portal solutions. And now in this role, he assists companies on utilizing apexanalytix software solutions to meet their business needs. So welcome both. Thanks so much for being here. And I'm going to turn it over to you.
Thanks, Naomi. I appreciate that. Thanks for the introduction. And so I'm Ray Swetnam, the Finance Director here at Koch Global Services. Koch Global Services is the global services platform for Koch Industries Incorporated. Koch Industries is one of those large companies that maybe not everybody has heard of or is connected with. So I'll give a little bit of details behind Koch Industries overall and help you make that connection a little bit further. We are a global company that has over 120,000 employees, of which about half of them are in the U.S. We have multiple locations throughout the world that we serve, which is up to now 70 countries worldwide that we operate in. Koch Industries has many diverse companies underneath their vast portfolio. Some of them you'll probably recognize: Georgia Pacific, a lot of our consumer products that are leveraged across multiple platforms, even our own personal use around Georgia Pacific products. Infor is a software company that is in the Koch portfolio, as well as Invista, which provides a polymer-based solution for nylon polymers. And a wider range of other industries worldwide, including agriculture, building materials, glass, automotive components, refining, renewable energy, chemicals and polymers, pulp, paper, packaging, consumer products, electronics, you name it. We're pretty much widely invested in a lot of those platforms. We are a private company, but Forbes has estimated our annual revenues to be around $115 billion annually. We've invested nearly $35 billion in technology-related investments as we consistently reinvest 90% of our earnings back into the companies that bring us the value that we create. We operate within the principles of market-based management, or widely known as MBM, which provides us the ability to push those decision rights down within the enterprises from a bottom-up perspective versus a top-down standpoint where maybe some companies tend to operate. We operate at bottom up. This gives the business units more direct control over most of the property rights and allows them to focus not only on the products and services that they deliver, but making sure that they build relationships with customers and suppliers that create cycles of mutual benefit. How have I become an expert around fraud and fraud risk in my company? Well, I joined this group back in May of 2021. I'd spent nearly 10 years with Koch overall in the vast, different finance and accounting functions. But we saw a need in this space, particularly around supplier onboarding and master data management, primarily because there's an ever increasing number of fraud attempts in this space, trying to generate supplier payment frauds. Koch has had some actual losses as well as some near misses, including a $14 million fraud attempt, which nearly occurred last summer if it wasn't for some of the controls that we had in place. And just knowing the risk of fraud that continues to exist, it continues to emerge, continues to be a growing factor for all businesses and all companies, was not something that the CFO here at Koch Industries took lightly. It was something that he thought about regularly recurring, had processes, procedures, controls, and technological solutions that help us manage this fraud on an ongoing basis. So here's the reality, right? Business circumstances have changed. Fraud continues to increase. More and more every year we see the number of attempts at supplier payment fraud occurring. We actually see in the FBI crime fraud report that these numbers continue to grow. Those fraudsters continue to get more and more sophisticated. They infiltrate our suppliers' emails through phishing attempts, hacking into their systems and asking for us to change banking details on behalf of the supplier. And next thing you know, we make a payment to a fraudster if we're not following good processes and controls. Here at Koch, we had one that was nearly around $14 million that was prevented, primarily because of some of the good controls that we had in place. It started out as an email communication that came through one of the business units. The business units followed natural processes and initiated that request through my team, where we performed the validation. That validation performed in a failure, and we were fortunate enough, because of that failure and the length of time that it was taking us to execute that validation, that we were able to identify that this became a payment fraud. While we were doing the validations and going through the external and internal processes to validate, the supplier had contacted the business unit wanting to know why we hadn't paid them. Well, we hadn't paid you because you asked us to change your banking details. Well, that turned out not to be true. And because of the amount of controls and escalation points we had in place, we were able to prevent that fraud from happening. Fraud is so rampant that we're even seeing organized crime syndicates get into this space. It's lucrative for them because it takes little to no effort on their behalf, and all they have to do is try to socially engineer a payment request banking change updates, or make somebody feel uncomfortable because they're not getting paid for products and services that you've purchased. And next thing you know, they've got money coming into their account, and once they receive it, they start bouncing that money all over the world, making it very nearly impossible to trace. This continues to be a problem. It continues to grow. All of you have probably experienced this. We at Koch have experienced it as well. Many of us experienced work from home challenges as a result of the pandemic. And coming out of the pandemic, we know that workers have a strong desire to continue to work from home, whether that's full-time or part of the time. And because of this, we know it becomes even more difficult for us to get a hold of suppliers, to do the televerification processes. And fraudsters know that. The fraudsters know the challenges that we're up against. They know that we have people working from home. They know that we don't have maybe the same robust processes in place or the oversight that might be there because of some of the work from home aspects of our roles. And they're trying to take advantage of that. Koch has experienced, an increased number of fraud attempts over the year that I've been here. And some of those have resulted in near misses. Some of them, have been thwarted for a lot of cases. And in some instances, we did even have some losses that occurred, mostly because processes and controls weren't being followed. This risk of fraud continues to grow, continues to escalate, and continues to be something that keeps me as well as our leadership up at night, knowing that there's an opportunity to pay somebody that we're not doing business with. Barry, do you know why Friday is especially popular for payment frauds?
I do not, Ray. So I'm not. I could take a guess, but I'm not sure. But let's hear why.
Yeah, so Friday is rampant for payment frauds, primarily because we have 72 hours to report cybercrime reporting. And even the banks have this 72-hour rule to report cybercrime reporting. And if it isn't reported within that 72 hours, recovery of those funds is nearly impossible. So fraudsters want to do that on a Friday because they get 2 free days. I'm not working Saturdays and Sundays. My peers aren't working Saturdays and Sundays. So basically, they've got a head start. They have a 48-hour head start because they infiltrated the systems and processes and controls on Friday, and now we're at a disadvantage by 48 hours in recovering those funds. Oftentimes, those funds aren't even known to have been sent to a fraudster for maybe weeks or even days, because it's only upon the time when our suppliers call us and ask us, hey, where's our payment? Do we realize that we've made a payment to a fraudster? And I talked a little bit about this a few minutes ago. The fraud that we've seen here at Koch, and one of the biggest ones that we continue to speak about because it was so large, and these can be even larger than the $14 million fraud attempt that we had here at Koch. That just happened to be within one of our businesses that has some pretty large transactions, and that was a couple invoices worth of payment. Fraudsters are using business email compromise as a mechanism and means to infiltrate suppliers. They're using that as a means to do some data mining, looking at keywords, invoices, statements, payment due dates, etc., to help identify between a customer and their supplier. And then they're following those email chains and putting in a note asking for banking changes to be conducted. On this circumstance, we do in a week's time. And because the fraudster was in the email chains or in the email box of our supplier contact, they saw that these invoices had been sent from our supplier contact to the business unit's contact here at Koch. They then followed with an email that says, oh, by the way, I know we just sent you a couple invoices. I wanted you to be sure that you understood that we've changed our banking, and here's our new banking details. Those banking details were then ran through some robust validation processes and identified that once we got a hold of the true supplier contact, turned out to be not having any changes at all. And that bank account belonged to a fraudster who had infiltrated their systems. Now, they had to work with cybersecurity and deal with getting that supplier out of their systems. That's why a lot of companies do phishing schemes to make sure that their employees understand those phishing attempts and what can happen as a result. And some of these suppliers that we've worked with have found out firsthand how these fraudsters have hacked into their system using those phishing attempts. Fortunate for Koch, we were able to catch this right before the payment was going to be executed. No banking details were changed, and the reason for that is because we identified and the validation failed, preventing us from moving forward with the change request. Fraudsters continue to be creative. They use techniques like social engineering. I mentioned business email compromise as well. They're even using phone masking technology, and they're even using deep fake techniques and impersonating leadership within organizations to try to get people to feel uncomfortable about an escalated situation and make a change that they wouldn't otherwise do, and change banking details and initiate a payment that can cost the company millions of dollars. That real situation, which almost occurred here at Koch, was around $14 million that could have been paid to an imposter. This fraudster was able to infiltrate the supplier. When we failed the validation, we gave them being the fraudster, enough information that they were able to come back to us and respond to some of the inquiries that we had, only because we had initially started communicating back and forth through email versus actually picking up the phone and calling our contact at the supplier. The fraudster called back using those phone masking that phone masking technology, impersonated who we said we had originally talked to, that the payment the banking validation failure had occurred with, and they turned around and called us back the following Monday, trying to get us to change the banking, indicating that they made a mistake and forgot that we were going through a banking change. So all of that led to some serious internal review, helping us identify ways in which we should be ensuring that we have good, robust controls around banking validations, as well as where technology can help us prevent some of these things from occurring. We've since, we've partnered with apexanalytix. They've been a great partner that's helped us take advantage of technology in this space. It helps us remove some of the emotion, remove some of the personal interactions around validating banking details. We're working to drive all supplier changes as well as new supplier onboardings into the portal, and all requests that we have using the apexanalytix supplier portal, we have had 0 fraud attempts and risk exposure as a result of moving to this platform, because the validation efforts are real time, they're automated, and it takes away some of the emotional aspects of social engineering that prevents fraudsters from infiltrating our processes. How are we getting to a point of a goal of 0 fraud exposure, and what are we doing to achieve it? Well, first of all, the first thing that we focus on is really making sure the number of control points that we have in place that give people access to changing banking information on the supplier. We want to make sure that there's a limited number of people that do this. They know the risk, they know the exposure, they identify what the controls, and they're on a need to know basis per se. Second, we're driving creating some additional institutional awareness, which those people that have the responsibilities and capabilities to change banking details, that we're training them, we're giving them the education that's necessary, and we're connecting them to the things fraudsters are doing. What are those emerging trends? How are they getting involved in the systems? And arming them with the decisions rights to stop, to think, and to ask questions, escalate where there's concerns, because the technology is important to us, and it helps us drive to the value that we're working to achieve, and reduce the risks that we're focused on around this fraud risk. But the people and the processes that we have in place are instrumental as well. And then lastly, utilization of the Apex portal. This enforces that single control point. It builds in layers of protection that helps us keep fraudsters out of our processes, out of our controls, and helps us get more comfort in the fact that the banking details, the supplier information is all being managed within the portal, and it takes away those emotions. It takes away some of the people, but also gives us the ability to streamline some of our processes. So I'm going to kick it over to Barry so he can talk a little bit more about apexanalytix portal and those different layers of protection.
Yeah, thanks, Ray. So just want to talk about how the Apex portal protects supplier payments and some of the different levels of protection that it offers. So having multiple layers of protection is the most secure way to control bank account changes and prevent payment fraud. There are 2 main types of controls as it relates to sort of protecting these supply payments. One is the user authentication, and one is the data validation itself. So one, ensuring that the right people are doing what they need to do, and then 2, making sure that the data is correct. So this sort of splits out into 3 different things. I'll talk about each of these briefly, but the first 2 relate to that user authentication. So the key to the supplier portal is ensuring that the right supplier contacts are allowed in the system, And this happens by ensuring that only those ones that are invited by Koch or any of our clients are able to get into the system and manage the accounts, of the relevant suppliers. And then in addition to that, making sure that there are things like multi-factor authentication turned on. So protecting, the users and making sure the right users are there, as well as adding security questions. So multi-factor authentication may ensure, that, the right person's logging in, but what if their email gets hacked? And the security questions can get layered on top of that to allow, hacker may not know the answers to those questions. So that helps just making sure that the right people are there and then they can access it. In addition, with the Apex portal, there's the ability to validate email domains, making sure that the email domain is good, that the emails themselves can accept, incoming emails as well. And then user behavior monitoring is important. So tracking changes. So all changes are tracked through audit logs. So who logged on, when they logged on, what IP address did they log on. So to be able to track that allows you to do certain things. So obviously from an audit perspective, it allows you to track who did what, where, and when. So if there is some research needed, you have access to that rather than somebody called, somebody emailed, and so on and so forth. But just the other piece of it is, having that user behavior allows you to block certain IP addresses. So you may say, hey, we want to block IP addresses in countries where it's known to have people who try to sort of perpetrate fraud. And you can also provide alerts for suspicious activity. For example, multiple logons at the same for the same supplier account in a short period of time, log on at unusual times and things of that nature. So user authentication is one of the first keys, and then the last three areas here relate to the data validation. So once the person is in, how do you control the right information is being entered into the system? And most fraud attempts happens on changes and not necessarily new supply setups, so bank account changes. So there's a number of things that within the Apex portal can be done to make sure that changes are done and managed in a way that you have some confidence that there's not a fraud attempt. So the first thing is that bank accounts get masked once the information is entered. It gets masked even from the supplier logon. So the last four may get displayed, and then any future changes require the current bank account details to be known before you can change it to a new one. And then in most people who are trying to perpetrate fraud, they're just trying to, through the path of least resistance, get in and out. So they probably don't know what the existing bank account number is. They just know, hey, change it to this one. So that prevents that. There's also some alerts around if the bank account is different from the vendor or the supplier country. So, this not only helps sort of mitigate some fraud attempts where, hey, I want to be paid to another country, but, the corporate address is in the US. That can also help with just some other general banking controls around tax evasion and other fraud mitigation things as well. I know there's some legislation in various countries in the UK and others that, you have to do due diligence when you're paying to an offshore account. And then, obviously with the Apex portal, there's no way you can accept changes through email or through phone calls anymore. So, hey, if you want to have any changes, you're the owner of your account. You go in, log in, and make those changes yourself. So, no longer should you accept phone calls and emails to make changes. And then just from a change perspective, if there are multiple changes in a certain period of time, the client can get alerted to say, hey, this is unusual. We've had 3 bank account changes in the past month. Please do not approve this rec or put it in a particular status, requiring some additional research before anybody approves that and actually automates the integration to the ERP. And then, some other things that can happen on changes is business rules can be built to send an email to the client contacts if there are changes or if an additional contact comes in. So things, again, just to sort of layer in some different protection things there as well. From a bank account ownership perspective, so within the Apex portal, we can integrate with some of the bank ownership providers, early warning being obviously the most common one, that allows us to do some bank account ownership. We also have the ability to do similar things in Sweden, Poland, India, and we're constantly looking for other opportunities to do that. But this bank account ownership verification is an automated process where it can pass certain data attributes, the supplier name, the account number, tax ID, et cetera, to that third-party provider and get a response back to say, yes, the account number and ownership is good, or certain other attributes where the ownership primary data is good and the secondary information may not match, or this is a potential, a potential fraud. Go ahead and do some additional research before, moving forward and approving those changes. So we can integrate with those services and do some of those account ownership validations. And then finally, on the Apex Bank Pro, we have within our database, we have some supplier records and a large network of supplier records that allows us to have our own sort of confidence score of, is this a good bank account? Was this bank account paid by other clients? Are there other clients using this? How many? How frequently has it been used? How many companies pay the same vendor? Is the right country being selected the right one to make this payment? So within our internal sort of network, we're able to provide some additional confidence scoring that can be used in conjunction with all of the other things to make, to give our clients the ability to make informed decisions before they approve any changes around bank accounts. So that sort of is that. So now, let me just take a minute or two here to talk about how we've set up and helped Koch with their processing. And obviously, the two main goals of Koch were to automate some of the process as well as mitigate risk and fraud throughout that process. So this is a high-level diagram of the flow, and I'll just go through this step by step here. So the first step in the process with the portal is to invite the supplier. So certain people at Koch have the ability to invite suppliers. During that time, that's when there's a form that gets filled out, some duplicate checks, various other things that are input to invite the supplier. Validation of the email and various other attributes get included there, prohibited list screenings and things of that nature. Once that invite is approved, it gets sent out to the supplier where they log in. They log in using the password policy of the client, and that's where the multi-factor authentication, the security questions may be enabled to allow them to log in, and they complete the registration forms. As they're going through that, so that's things obviously like address or addresses, the banking information, the tax information, diversity certifications, and various other things that are required by our clients, or in this case, Koch, to capture that through the process. During the onboarding process there, while the supplier is in there, the real-time validations are happening. So tax validations against the IRS, the bank ownership validations, but also banking validations around ABA, SWIFT, IBAN, CLABE, et cetera, address validations are happening there, as well as a number of other validations are happening as that goes through the process. Those are displayed to the supplier in real time and force the supplier to correct any information that they may have miskeyed or may have not been validated. So they would correct those as they go through. Once it goes through the process and they submit that record, it goes to an approval process where it will drop into an approval queue based on those conditions. And then this is where a Koch employee will take a look at that and look at what we call the vendor controls, the checklist of, okay, what's happening? They'll actually be on the, I think on the next slide, there's an image of that we can go through. But then they make a decision. Let's assume they move forward and approve it. It can be sent to the ERP system. The ERP system gets updated. Once the ERP system is updated, the supplier gets turned to active. And then at that point, when the supplier is active, any future changes can be made by the supplier. So they can log on using the same credentials and update their profile. If they update their profile, the same validations are happening. The approval process gets triggered on changes again. So again, if they 6 months after doing business with them, they have a new bank account, they can log on and do that themselves through those validations, through the same approval process, going all the way to an active supplier to enable that to be paid within the ERP. So I know, Ray, you want to just talk a little bit about where you came from, where you are, and where you're going with the current process as well. So I'll turn it back over to you.
Yeah, absolutely, Barry. Thank you. So where Koch is right now, where we're going, and how we're getting there. Well, where we came from, we had enterprises that were forced to collect and populate all this information directly from the supplier, including documentation for banking details, documentation around tax W-9s, W-8s, et cetera. All of this was 100% manual in the collection. It was 100% manual in the validation efforts. We were calling suppliers. We were calling banks. We were going to IRS websites, going to different compliance screening websites to perform all of these validations very manually. Where we are now, well, now we're leveraging apexanalytix portal. It's supplier facing, so we don't collect the information directly and accumulate that and share it to perform the validations. We ask the suppliers to provide that information directly in the portal, which includes all of their tax documentation, everything that we need to determine whether they're tax reportable or tax exempt. We're able to achieve an independent banking validation, leveraging the portal to perform those validations for us. And we're able to take a step further where we don't get the confidence scores that we would like from the portal, and build robust processes around how we manually verify those items that have a different confidence score than what we deem acceptable. Where we're going, well, right now we're working really close with apexanalytix and helping us define our ERP integration between the portal and our ERP. We're working first on our N4 product suite and getting some of the blocking and tackling of the integration out of the way with that system. And then we're going to take lessons learned and the value that we've achieved through the N4 and Apex integration and apply that to other tools and systems like SAP and Oracle to help us improve the data validation automation processes for the other companies that use different platforms and different ERPs. So Barry, I'll kick it back over to you to kind of talk a little bit more about what the automated banking validation looks like.
Yeah, thanks, Ray. So on the screen here, this is sort of that step at the end of the process where the approver is presented with a view into, okay, what has the supplier entered and some of the validation happened. So in this example here, it's passed the bank code validation, meaning the ABA was validated automatically and that was correct. The tax validation was passed, the email, and so on and so forth. But the validation here is that's failed is the bank confidence score, the Apex Bank Pro score here, where it's taken that information and then we have a real-time validation into our database of sort of proprietary supplier records and saying, okay, from this perspective, again, does this particular supplier record exist with other companies? How long has it been in use? Is it, been paid recently? How many databases and so on and so forth? And based on that, we return a score, a confidence score, and then a description. So in this particular case, the confidence score is low because this particular account has not been seen before, is not used by any of our clients as recently. It's the first time it's been set up. And we're sort of saying because of all of those, and we use over 20 different attributes to come up with this algorithm, that we would recommend that, this is a potential risk. And we think that you should take a look at this with the information provided. So this allows you to cover more than just what early warning may cover, international suppliers and some of those smaller credit unions that we may have within our 7 million plus records we have within our database of banking. So this is that additional layer of control that we can add to help our clients out with some of those ownership questions that always come up. Okay. So we just have a poll that we would like to take 30 seconds for the participants to fill out, just around when a supplier makes a request to change the information. What currently do you do today? How do you verify and validate those changes that are requested? So we're just going to leave this open for the next 30 seconds or so and just ask that everybody go ahead and answer this, and then we'll look at the results here. So let's take a quick look at these results here. Okay, so we've got a bit of a mixed bag of results here, which is good to see. So it's good to see that nobody currently has no process in place, and also it looks like nobody on the call has a supplier portal in place, but there are a number of different ways that are done today. Ray, do you have anything you want to just give feedback on the results here?
No, I think I think it's pretty self-explanatory here, but I would say more times than not, email and contacting the supplier manually is a predominant method across the industry. Lot of companies are trying to solution the banking validation efforts and automate those where we can, and building relationships with partners like apexanalytix can help facilitate that. I too am glad to see that there's nobody that's selected they're not doing any form of validation. I'd like to hear maybe a little bit more about those who selected we call or email the bank, how successful that is. We have probably around a 20% success rate when we connect with the bank directly, because oftentimes banks don't want to give out their customer information. So maybe a little bit, I'd like to hear maybe a little bit from whoever made those comments or made that selection, to see how successful they are when they leverage that process.
Thanks, Ray. So just a couple of words about apexanalytix. So apexanalytix is happy to help over 250 Fortune 500 and Global 2000 companies with supplier management solutions. Just a couple of highlights from the left-hand side. We have over 55 million golden supplier records in our Smart VM database. and over 7.5 million suppliers that are actively managed in the Apex portal today through our clients as well. And then we have 850 integrated data sources for validation and enrichment. So those validations against the global tax IDs, the banking validations, the address validations, and various other ones that we have automated into the process is actually the largest number in any supply portal solution out in the market today. So we're proud of some of that. So with that said, I think we'll now transition to the question and answer section.
Hi, that's great. Thank you both very much. We do have several questions coming in, so let's get to it. So we have a question. Was there any pushback from your suppliers when you asked them to enter their information in your portal?
Initially, I would say there was maybe a little bit of pushback, but I think we did a really good job of connecting them up front to the value of using the portal, both from their standpoint and from our standpoint. It protects both sides, right? So we're trying to get them to save us a little bit of money by populating this information and not require us to collect it. But from a fraud risk prevention standpoint, it's beneficial to both parties. It prevents us paying somebody other than the company that we're doing business with, and it just helps us manage that relationship between the supplier and us as the customer. And getting them connected to that up front isn't a huge challenge. A lot of companies are moving towards the supplier-facing portal approach. So in a lot of cases, these suppliers are already connected to the necessity and need around this. Plus, they're really interested in keeping our business and continuing to work with us, and are willing to participate in some of these new features or requests that we have.
Great, thank you for that. Ray, another question for you. What's the biggest surprise you had when you first got into the supplier enablement role?
I would say probably the biggest surprise to me was the sheer number of fraud attempts that can come across, and how creative those fraudsters really are. Using deepfakes, using phone masking technology, doing phishing schemes, and really just infiltrating systems and tools and processes, and taking advantage of people and companies that maybe aren't as attuned to, or maybe it's not a key part of their role. So their focus isn't necessarily on fraud prevention, and so they move forward with some of these change requests. I would say the other thing that really came to a surprise was the sheer number of people that typically have access to change, add, or delete supplier master data, and the functions in which they play within the organization. Here at Koch, when we started monitoring the total number of people who had access to change supplier master data, we stopped counting at 400 people that were doing that or had the ability to do that. And when we were looking at the diversity across that group and what positions that they held, and maybe even their area of responsibilities, we identified with the vendor master data or supplier enablement was a really small piece of their overall processes and responsibilities. And so you've got people in accounts payable who their primary focus is on invoice processing and on-time payments. They're not being monitored on supplier payment fraud or prevention of fraud or how quickly they onboard a supplier. So the focus and prioritization just tends to lie elsewhere with other priorities. By Koch focusing on building this leverage capability, that is our focus. That is what we do. That's all we do every day. Our trainings are tailored around supplier enablement and fraud prevention activities. Our growth and development within this space is all focused around supplier onboarding, how we prevent payment frauds, and how we make sure that we're doing business with the people we want to do business with.
Thank you. That is quite shocking to hear of so many people having access. So a couple more questions here. These are great. I encourage you, there are Q&A tabs at the bottom of the console. Do continue to put your questions in there. So there is another here around what would you advise that a company put in their business case for putting a supplier portal in place?
Yeah, so for Koch, we were probably a little, I don't know. I think we undersold the value of the supplier payment portal, even though we still made the decision to go with the portal. After working with Apex for a year, we kind of took a step back and really looked at the decision-making framework that we leveraged to help us make a decision to go with Apex portal, and where we had 100% of our focus around the fraud prevention aspect of the portal and the comfort that we gain from understanding the confidence scores that come through the validation efforts. We put all of our eggs in that basket, but what we really found is that the portal helps us be more efficient, not only efficiencies on the validation process, but efficiencies on the upfront data collection piece, because now we're pushing that ownership and that responsibility over to the supplier versus hiring people internally to go collect that information on their behalf, as well as the value that we get from getting the requesters connected to the process overall, so they can help connect their suppliers to why we use the portal versus the manual collection efforts.
Good advice. Thank you so much. So Barry, we've got a couple of questions for you. So one came in right now. Some vendors send invoice for new bank details without communicating the new bank details before. Would the Apex portal send alerts to the vendors when bank data have not changed for a while to encourage the supplier to regularly check their data?
Yeah, so it can do. We have some clients who have business rules to say annually have an email campaign to the suppliers to say, hey, log on and just check everything is still good, and they can just go through, submit it. If there are no changes, no problem. If there are changes, they can make them. Or we have ones who are, a bit more reactive in that scenario, would send a note to the supplier saying, hey, we've got new bank details. We're not going to update them. Please log on. And you can send communications through the portal. So please log on and update these directly in the system as well. So there's both approaches available.
Great, thanks. And Barry, what's the main reason that your clients decide to implement a portal?
So I think Ray touched upon the two main reasons. So historically, it has been process improvement and automate manual processes. So for many, many years, that was it. Hey, let's get more efficient. We've got a lot of people doing this. Let's reduce the paper and automate the process. So that historically has been. In the last year or so, it's actually sort of more switched to, the key is more risk mitigation, fraud prevention. So the business case is, hey, we've had an attempted fraud, or we're worried about fraud. How can we help mitigate that versus, let's just automate our processes. So it's a lot more been driven by risk and fraud audit recently, but those are the two main business cases we see for when people come and say, hey, I'd like to implement the Apex portal.
Thank you. Well, Barry, Ray, terrific webinar. Appreciate all the insights and building that case of why it's absolutely critical to have these controls in place. I want to thank everybody for attending and to apexanalytix for sponsoring this. The session will be made available on demand, so if you have peers that will benefit from the session, please feel free to pass along the information. Also, before you go, feel free to connect with our speakers. Their details are on the console, and pick up some digital goodies which are in the Resource Center. So hope you have a wonderful rest of the day wherever you're based, and thanks again for joining.